Wichita housing market starting to settle down. Find out what we have to say in this week's episode and video. So before we get into all that, I got to do my usual due diligence. Make sure you like, comment, subscribe, share, depending on which platform you're on, to this content. It really helps out not only our company, but also anybody you can think of that would benefit from this. And that's one thing that I really want you to focus in on is who do you think could benefit from this information that you could share this with and let them know about this useful insider info going on in the Wichita real estate market real time. But the general theme that we're seeing with all this is that the housing market is starting to slow down. And what that means is it's not an impending crash, not an impending doom. It's just starting to settle down. And so instead of like 8 to 10 offers we're seeing on houses, we're seeing like 3 to 4. And really a lot of that is a case-by-case situation. Because I'll be honest, there's some listings we recently took that I thought would have sold by now sooner that are sitting a little longer on the market. And that has to do with a few different things, but each house is such a case-by-case scenario, and nobody has a magic ball that can just snap their fingers and make these things happen. You know, we do the best we can with our marketing services, marketing abilities, read the market and adapt to the market. And right now the precedence, you know, with a lot of sellers is that every house sells for fast and above asking, and that's not entirely true. If it's a good house, it'll do that. But I think having an expert professional come in like ourselves to really objectively evaluate your house helps tremendously, because you don't necessarily have the unbiased reasoning that we do quite the same way. When you look at it, you know, you have a lot of obviously personal interest in your house to get it sold. And so you may view things better than they actually are, instead of looking at the market objectively to where we could show you houses comparatively to the others and really look at this from a reasonable standpoint and not just an emotional standpoint. So that's just a long way of saying it's a situational on a house by house basis. And part of that, I think, is just the expectation anymore of what is a good house and what isn't. Has greatly varied as far as the amount of updates, remodeling, finishes that go into a house, what's considered a good house with HGTV, and how many people are putting all kinds of remodeling into their house. That's a little bit more the perspective that people want to get out of house, to where they're willing to pay more for those houses. Now, the other houses that aren't quite as nice, that aren't in super fixed up, super good shape, those ones we're seeing actually sit on the market. And then because of the perception that every house sells for more and for over asking, people think, what's wrong with it? How low they go? Why can't we get it sold? So it's a very drastic situation of either it sells right away for over asking with multiple offers, or people are going to start to think, what's wrong with it? Because it hasn't sold in 5 days, 7 days, 14 days. The truth is there's really not anything wrong with it, and it may be priced well and fair, but now that buyers kind of know these sellers are dealing with this perception of their house, they're kind of getting into more of a neutral situation where they're like, well, let's see what kind of deal they're going to make, because we know they don't have multiple offers, it hasn't sold yet, and we're starting to normalize back to a I wouldn't say necessarily a fair market, but just not quite as a hysterical market, a crazy market. So, and I'm going to go over some of the stats for this to give you a better idea of everything. So let's just go ahead and start doing that now. Let's share my screen and we'll get into this report that we go over. So this is the Keeping Current Matters report that we go over on a national perspective. And I'll kind of talk about some of the national trends we see, but then also how that applies locally to here in Wichita. Because even though Wichitans like to think that a lot of things don't apply to us, they do. We're just a little bit more insulated than the rest of the nation. So these things we're seeing nationally do have an effect on the local Wichita market, just maybe not as drastic or dynamic of an effect as you see in other markets on other situations. So we are a little more insulated, but these things do still affect us. And one thing we're seeing, like what we're seeing from all these reports and different things, is that you're seeing a slowdown in buyers, and also what we call buyer fatigue and lack of showings. People are getting back to like all their kids' practices, doing stuff on the weekends, things are open, people are getting back to living life. And so there's maybe not quite as crazy of buyer activity and demand. We call this period in the middle of July, like the dog days of summer. It's really hot out. People are enjoying life. They're doing other things besides buying and selling a house. And then once the end of July, August starts to roll around, school's starting to come back into consideration. People are starting to think about, well, let's get this house before the school year starts, or right as the school year starts. You start to think about, I'm starting to run out of time a little bit. If I'm going to sell my house, I need to sell my house before it gets cold here in Wichita. And so there's a little bit of a delay for everything, because May and June went nuts, and then July, it's a little bit of a lull here in the middle of the month, but then towards the end of the month, it starts to pick back up again too. So it's a little bit what we're experiencing. It's also just a little bit that, the market is starting to settle down, essentially. It is still a very good time to buy, but you can see here, like the monthly showings have started to go down on everything. And these showings are a little bit delayed on what we have stats for, but like in May, so February, March, and April, the showings were up at 283, 280. And then now in May, they're at 248. And then June, we don't have the stats back quite yet, but I could see them, continuing on a downward trend. So then the reality of it is that, buyers are just getting tired. They get worn out. We have these different buyers we work with that, it might take them 4, 5, 6 offers to get one accepted, especially if we're dealing with a contingency situation, which we've had a couple of contingency situations go on that we've got under asking price or either at asking price. So it's not really the case that every house goes for over asking and you can't get a contingency offer accepted, because we've been doing it. But it gets kind of disheartening, frustrating for people when they know they want to move and sell for life reasons. But you have record price appreciation. And so we're going to start to see some of that level off, which I'll get here in a second. It's not going to crash. It's just going to level off and return back to some normal situations. So we're starting to see that. It's still going to take months for that to be accomplished. You're seeing record price appreciation, also extremely low inventory. I see that starting to change a little bit, but since there's such low inventory, it does get more exhausting for buyers to keep up this attentiveness to the market when there is such low inventory, or you look at them and then they go pending. Record high percentage sales over list price, record low days on market, historically low mortgage rates. Because of all that, that can be a little bit fatiguing here in Wichita. We don't quite see that as much as other bigger markets like Dallas and Kansas City and Denver, those places. Just because we are a little smaller, we have that advantage here, but we are seeing that going on here. It's just a matter of relative perspective. So I'm already starting to see a turn in the market coming. Like I said, we have some listings that I thought would have sold already by now that are still on the market, and we're having to evaluate with our sellers, look at the marketing, look at the showings, look at their pricing, and see what we can do to actually get this thing to sell. And given their personal situation, how aggressive or how much we want to kind of sit back on some of those things. The market is still hyper competitive, but again, it's such a house by house situation. It really depends on the house. It's got to be in tip top shape for it to really sell well. Doesn't mean you can put a turd on the market and it's going to sell. And you do have serious buyers right now looking. So, there are people still out there looking, but one of the things I've seen is that, people are willing to sit and wait because they want their situation to be more flexible, and they'll wait around 2, 3, 4, 5, 6 months for the right house to pop up and make that decision. It's not as, even though we have low inventory, doesn't mean people are just going to take whatever's available on the market. They'll wait, or they'll, and when I say wait, meaning like they'll wait a day and a new house will be up for them to consider, or they'll wait 2 days and another house will be up for them to consider. So we kind of have all these buyers that are sitting on standby a little bit till a house pops up, comes on the market. We evaluate it right then and there. Is it worth showing or not? And if not, then it's out of their mind. So it's literally like that fast how people will consider a house or not consider a house. You can also see the month's inventory. We have a bunch of equity that skyrocketed. Some of these things have already gone over before. We are seeing inventory levels rise, which is good. And, this is just from May. We'll see what June and July looks like since we're still in the middle of July. As far as a seller, the thing is with this is, and I'm experiencing this a lot with people that are looking to sell their houses, you can't be too unrealistic, because this market is starting to return to normal. It's a little bit like the window is closing and I don't want to say you missed your shot, because it's not quite there, but it's very close to that. And you got to come down back to reality of not having this ego about your home's value or what it's worth and that kind of thing. And if you wait too long, you'll miss out on an extremely attractive market for everything, because this will start to normalize, especially once we get into winter months. It will very much normalize, I believe, on everything. So if you are thinking about selling, now will be the time to start the conversation about what do I need to fix, what do I need to work on, what do I need to improve to still take advantage of this good market. Because like I said, it's going to take months for this to accomplish. So don't think it's going to be like next week it's this way. It'll take 2 to 3 months for these things to really play out, but we're already seeing the signs of this. I want to get this message out as soon as possible. It just depends on, how attuned you are to the market. It is a good time to sell still. Price appreciation will moderate as rates and inventory rise later this year. That's what I'm saying. It's going to settle out. A lot of this is just saying the same thing over and over, to be honest with you. It's going to settle down. It's going to settle down. It is a good time to move up, though, because especially right now, as things are starting to settle down a little bit more, we're seeing contingencies being considered. Get a good price for your house of what you're going to sell it for, but then also buying in a little bit more reasonable situation, meaning that things aren't necessarily as overpriced as you might think they are. We're going to have a new benchmark of what's acceptable in a market. And really, when we break down and look at a house with you, we'll show you that. We'll take a screenshot of the neighborhood we're pulling from. We'll take the data that you're looking at and see what's the price per square foot for this neighborhood that things are selling for. That's how you take, like one we were evaluating the other day, is the listings were anywhere from $330,000 to $470,000 in this particular golf course neighborhood. That the price ranges were anywhere from $80 a square foot to $100 a square foot, to the highest was $130 a square foot. And, our job is to help you interpret that data, that market data, and try to make sense of all these numbers. It's not quite an exact science across the board where it's like all houses in this neighborhood are $102 a square foot, because some of the smaller ones have a higher price per square foot. Some of the bigger ones have a lower price per square foot. You just got to evaluate everything together. And that's really our job, is to help you objectively evaluate these things to make smart decisions. But you're not necessarily overpaying for a house when it's all within the market data of what has sold in the last year in that neighborhood. So I think sometimes the headlines and your friends and popular belief can get you hysterical about everything, because we're such emotional beings. And so we like to make emotional claims and let our emotions derail our logical thought process about these things. But once we start showing you how we really break it down, it's like, oh, that makes more sense. And then again, you have an emotional feeling of, I'm more certain, I'm more calm, this makes sense, I'm comfortable with this, and that kind of thing. So you're going to start to see more normal, quote unquote, whatever that means, normal situations start to come about with real estate. I laugh because every single situation in real estate is different. As much as we try to normalize it and structure it, everybody's personal situation and real estate situation is different, i.e. why you need a professional to help you evaluate the special circumstance you're looking at. They are still looking at home price forecasts being pretty healthy for next year, anywhere from 6 to 10%. 8.9% is average, which to me, that's normal. Houses normally appreciate about 6 to 8% every year. One thing we are seeing a little bit is builder confidence slipping a little bit because of lumber, labor, and land concerns. One thing I'm seeing a lot here in Wichita is that these builders are on allocation for the parts. So it's not a matter of price. It's a matter of material availability. Same thing with labor availability. So you need the stuff to build the things, and you need the people to build the things as simply as possible. And it's not a matter of paying more just to get it. It's just the fact that the resources aren't there. So what a lot of the material supplier companies have been doing is they've been placing all these builders on allocation. And so whatever you bought last year is what you're getting this year on a month by month situation, until they can keep up to have an excess of supply. Because basically everything's like, as soon as they built it or made it is out the door type of thing. That's what allocation is. There's no surplus of inventory for these material suppliers that build the houses to get out there. And so in order for the builders and the market and the economy to not have any kind of unequal or unfair advantage for a builder, that way one builder can't just come in and buy up all the parts and put the other 5 builders out of business because he just bought all the parts from this company and now these other companies can't buy anything. They've allocated it, distributed it out based on last year's supply just to get through this temporary situation we're in, to basically keep everybody in business while we're catching up with all this, instead of having certain businesses try to just bully others out of the market on everything. So that's one reason why there's material allocation, to where even if you want to pay more, you can't just pay more and create more material. The material is just simply not there. So same thing with labor. Labor may have gone up in price based on availability, but that one framing crew can't all of a sudden turn into 2 framing crews. So that one framing crew can only frame one house at a time. There's only so much time that they can really produce and put houses out there to frame. That's one example, not to mention, foundation companies, excavators for digging the basement, because those 3 are the biggest ones we've seen are in shortage and taking the longest. And a lot of that is honestly because the trades have been kind of looked down upon for so long. The college degree has been pushed so much in this country that over the last 10 years, we've seen a labor shortage go on, to where that's starting to really bite us in the ass now, is what's going on. And that's a large reason why you're seeing builders not being able to produce at the level they need to is the material shortage. But the bigger one was the 10-year shortage of labor, of people going into the construction and trade industries that we need, specifically around Wichita. We need framers, we need concrete foundation companies, and people to dig the basements. And a big piece of that concrete foundation company, is that it's so damn expensive to get into. Some of the cheaper forms for pouring a concrete foundation are 60 to 80,000, and the good ones are like 200,000 for one set of forms. That's one basement. Like, it's very expensive to get into that business. Not to mention it's looked down upon, and then you can't find workers. Like, it's a tough industry to get into, but it's definitely something that's needed with everything. But hopefully that helps kind of explain situation, what's going on. So mortgages and forbearance are decreasing. Not really anything crazy going on there. They've learned a lot more of how to handle this situation. It's really not like it was in 2008. Looks like Kansas is at about a 14.6 appreciation. On average, the U.S. is 8.8. That's kind of interesting. Hawaii actually had negative price appreciation. Interesting. But anyway, if you want their support, you guys can look at all this. Don't really see any bubble bursting other than possibly the second home market. There's a lot of people who bought second homes. This is, I thought, was a pretty interesting stat here, is that people purchase second homes a lot. So like Florida was an example one, along the East Coast, like Carolinas, those type of places. Investment property actually went down, probably because a bunch of the tenants couldn't pay rent, so people didn't want to buy them. I think a lot of lake properties got bought, like the Ozarks, Table Rock, Grand Lake, places like that. But that's what we saw, is a lot of people end up buying second homes, is what really surged in 2020. So it'll be interesting to see how that plays out with everything. What else do we got of significance go through here? Headlines do more to terrify than to clarify. That's why we're putting this stuff out, so that we can get more reasonable things out there. It's not like 08, because we're not cashing out near the amount of equity by refinancing billions, kind of like 2005, 2007. That's what led to the crash. You look at where we're at now. It's really not the same situation. We have seen monthly mortgage payments increase. That's probably because the prices increased too. But really the increase from 1,011 to 1,184 isn't a giant increase, because it's still very affordable when you look at this graph compared to, what we've seen. It's more affordable than ever based on your income, on what kind of house you can buy. But this gives you kind of an idea of what the forecast for housing is going to be over the next 5 years. It's going to start to return to historical norms. Like we said, it's going to settle down It's going to take months to really see some of this really go on, and years for it to really be in effect of where we're at. You still get good price appreciation. Buying a house is still a really good idea. You know, it's just based on your personal situation. It's not necessarily on anything other than that. You know, your personal situation is more important than what's the market doing? Because that's the number one question we get as realtors. How's the market? Like, you know, how many times I've heard that question? All the time. Well, it depends on your personal situation. What price point, what location, what has you looking? Do you have a house to sell? Are you renting? Like, there's a lot of questions we have around that. But hopefully this has helped you learn a little bit more what's going on real time right now. The market's settling down. That was just a long ass way for me to say that. And appreciate you watching as always and tuning in. If you want to get started talking about your personal situation even more in detail, let me know. But go ahead and like, comment, subscribe, share it, all that fun stuff. Talk to you guys later. See ya.